Cameron, good morning. Happy Monday. How you doing, boss?
Doing great, thanks. How are you, sir?
I'm doing really good. Look, I won 3 bets in a row from Saturday night into Sunday on sports, which means that my weekend is always going swimmingly. And then I woke up to some pretty big news here this morning. Looks like we're going to have a pretty crazy market day. But your company, no stranger to some crazy market days, as you announced a huge contract last week. So for those of you that might not know, this is Draganfly, that's ticker DPRO, DPRO on the NASDAQ. This is CEO Cameron Chell. Draganfly is an unmanned aerial vehicle company that is, I think, headquartered in Canada, but operates in Canada and the US as well.
States for well over 20 years.
Okay, there we go. Last Tuesday, you announced a big contract here. Draganfly announced its selection by the U.S. Army to provide Flex FPV drone systems. So I'm going to start right there. Can you tell us about this? Can you tell us any more about the contract itself?
What's important about this contract is two aspects. First of all, we were selected. So this was well over a year-long process, plus years getting to that point. Having the U.S. Army select our FPV drone for their particular missions. Now, the other, so one, selection and the quality and the criteria that you have to go through to be selected by this type of a client is extensive and I think speaks to our team and our potential. The other really big thing here is this is the pointy end of the stick. This is the leading edge of what the U.S. Army and the Department of War is doing. We're not just providing drones, but we're actually working with them to embed our manufacturing into their facilities on base so that they can be doing assembly, modification, maintenance, mission profiling of the drones real time. So typically, and in the past, a pre-Trump era or pre-DoD era, the procurement cycles were years long. But what theaters of action like Ukraine have taught the Department of War is that you now need to iterate in hours, not years. And so this is the leading edge model where they're embedding us into their supply chain, into their manufacturing process, into the concept of operations, so that we're actually designing drones, delivering drones, providing drones, doing manufacturing with them in real time, so that within hours we're making mission changes.
Okay, that's that type of flexibility, absolutely important. That's really good stuff. I guess you kind of touched on this here with that answer a little bit, but more specifically, what makes Draganfly stand out in the drone defense space against its competitors? We look at drone stocks here all of the time. What makes DPRO different?
People into our actual verticals. So we've been in Ukraine with boots on the ground since 2022. We were delivering insulin into besieged cities in 2022. We've been doing mining there, demining work since 2022. Our Flex FPV drone and other parts of our product line were actually designed in those theaters of action in Ukraine with people that are warfighting, protecting our freedom right now. Now, we bring that experience back to our DOW partners. And so we're able to comment and think through not just the quality of the drone, but what is the concept of operations? What is it that we need to accomplish? So when we designed a drone, not only does it have to perform, but hey, what is the design characteristic such that we can get 7 of these in a backpack rather than 3? How do we design the backpack so that if you're in a situation, you're able to still execute on that plan and be able to manipulate and move and do the things that you need to do to be the most effective warfighter or the most effective logistics technician in that command cycle. That's what makes Draganfly different. Now, we've been in business for 27 years. Every single drone manufacturer that has been in North America in the last 27 years has gone out of business, other than the last 4 or 5, maybe 6 years, where we've seen this new drone cycle. Now, the reason is that we have been providing contract engineering to the DoD primes, the AeroVironments, the General Atomics, et cetera, all that entire time, and also serving our public safety. We've been doing what's called NDAA compliance, so secure drone manufacturing, supply chain logistics, that entire time before NDAA, which is the requirement for all drones now to be secure, non-Chinese, non-foreign made. We've been doing, so we helped coach this whole system through and have designed it that way. And those are our really big differentiators. We have engineers that have been doing this for 27 years, which is very unique in the business.
Okay, so it seems like you absolutely have a head start there on some of the experience with some of the engineers at the business. That is really awesome. Let me ask you, how do you plan to deploy the recent financing proceeds, and what type of return on investment should investors expect?
So right now, it's about $60 million. We're burning right around about $1 million a month. We're going to continue to invest that into our product line and into business development. We will do a limited amount of merger and acquisition, not even merger, but acquisition or investment type work that needs to be extremely accretive to us. We're really solid on the technology side and on the commercialization and deployment side. Definitely scaling our people right now and getting great talent. So acqui-hires is important to us. There's a plethora of talent out there that wants to be in the drone business or that are new startups in the drone business. Sometimes their technology is much less interesting to us, but their people are very interesting to us. So we're driving sales. We spent the last 3 years previous to this building out our capacity. We can organically build $100 million worth of product a year, which is what we've got the demand out there for right now. In fact, we had to build that capacity first before we could get this Army order, or presumably or hopefully the other DOW orders that we're working on as well. So that investment's been made. So now it's all about scaling.
Okay, and I'm going to actually ask you about that scaling, but before I do, I have to ask this. I ask every guest of one of these companies that I bring on here. How are you managing risks, around dilution and warrants from capital raises?
We've not done very large financings. We have really piecemealed our financings along the way, only to be able to have the capital that we need. So we've kind of run a real-time capital scenario. That's helped protect our dilution. Now, we did just do a $25 million raise, but it was when our stock was doing well. And we will only be raising capital if it's absolutely accretive. So if there is an acquisition that's very accretive, or if there is a large order coming down the pipe where the equity balance to the ROI on that investment, as opposed to maybe industry capital or government-backed capital or something like that, where it makes sense. So we're going to remain very, very selective about how we do that. We definitely, compared to the comps out there in the market, we've raised less money. We've been more conservative. I'm not saying that their strategy is wrong. It's not. There's some really fine companies out there that are doing some great work. But we've been around for 27 years because we didn't overstep.
Okay, and you look to continue that there. That's great, and that's what a lot of our investors are looking at. There was a question here. Ask them about offerings for cash, please. Really good stuff there. I appreciate you taking the time to answer that. Okay, the backlog is what I want to talk about here. What does the quantifiable backlog look like, and what type of conversion rate can we expect from that?
Our board consists of people like Tom Mosley, who's the former Secretary of the Navy, the only gentleman who's ever been able to do an audit on the Navy. The former Secretary of Defense, Chris Miller, is on our board. The former Chief of Staff of the White House is our chief advisor. So these folks are like, hey, we don't need to give guidance. We just need to show performance. Now, in terms of log, we very purposely built out $100 million worth of capacity over the last couple of years, and we wouldn't be getting this contract if we didn't have that capacity. So if that can give your listeners some sort of indication as the type of backlog, we'll call it, that we've got lined up, we've got very good order visibility for the next couple of years. And so because of that, we've also recently announced partnership with Emerald. And Emerald is a contract manufacturer, and we took a long time to make a decision to go with Emerald. So we have now an additional 7 plants in the United States that we're in the process of standing up and tooling to be able to meet the additional above the organic manufacturing that we're doing in order to meet that demand. That adds about $300 million worth of capacity to us. It will be coming on stream in phased approaches over the course of the next year.
Okay. Real good stuff there. All right, we talked a little bit about scaling there. What is your biggest challenge in scaling US manufacturing and supply chains?
I think the NDAA requirements and really working with the regulators and the government to source product that is NDAA compliant. Now that doesn't mean that it's all manufactured in the United States, but it's at the very least it has to come from approved friendly nations, trackable supply chain, predictable amount of inventory, and those types of things. So when you take out somebody like a Chinese manufacturer out of the market, where fortunately for us we've never relied on that. So we have a bit of an advantage there. But when you take that out of the market and you're used to the features and functions and price that industrial power would provide you, replacing that just takes time. So I would say that innovation, commitment, all the rest of it from the American industrial sector is there and it's moving forward. But there's just a certain amount of time to get certain technical parts built in areas where they do comply with the NDAA standard. That's probably the biggest challenge scale right now, but it's being addressed and it's being addressed quite quickly.
Okay, perfect. So you already have plans to kind of increase that. That's fantastic. All right, these last two
Yeah, we're
questions.
certainly on track to hit our numbers now, but it's taken us a couple of years to get all those supply chains. And with the increase of innovation that is just rapidly happening in the drone sector right now, we're constantly having to innovate also in our supply chain.
Okay, perfect. That's actually a really good segue to the next question here. How significant are the recent military and defense contracts, and what's next in the pipeline? If you want to generalize that, what milestones should investors kind of look for the next 12 to 18 months?
The signature brand, if you will, the credibility of the client. The size is much less important right now. The fact that you were selected, the fact that you are in the door, that is the most important thing right now. There are going to emerge 4 or 5 players out there that will be the dominant forces in this particular market sector. The biggest challenge to that happening is, did you get through the selection process, which doesn't take 6 weeks. It takes 2 to 3 years. If you're not there now, you're probably not going to be one of the major players that are in this space. So the most important thing is contracts, but not size. Contracts meaning who is it that's selecting you and what are the mission profiles that you're delivering on those. Now, second of all, will be contract sizes, because that will speak to your execution and it will speak to the longevity of what's happening. But those contract sizes are happening now. Now, in the military space in particular, it's a little bit different in the commercial and the public law enforcement or public safety space. But in the military space in particular, they're very, very sensitive about announcing numbers. Everything that goes in those press releases is also strategic information, and they're examined closely by people who may not be friendly, to the American agenda. So you kind of have to be a bit of an analyst when you're looking at these and read into what the potentials.
Okay, we're having a little bit of trouble with the audio. We missed like the first 2 or 3 seconds of every answer that you give. I did have one question here from one of the viewers. Hopefully you can answer it. Who do you view as your biggest competitors right now?
And the reason I say that is that the demand coming out of the United States, even if there was 5 times as many, 10 times maybe even as many manufacturers that are NDAA compliant right now, we would not come close to meeting the demand and the requirements that are needed and there's budgets for. So the better that any of our current competitors do, can't quite frankly right now, the better that we do. It's really establishing the market and the manufacturing ecosystem within North America. Our biggest competitors are the innovation, the low-cost manufacturing, the subsidized manufacturing that comes out of places like China. And I'll be candid, they make a fantastic product. Their products are better than ours right now, and they're lower priced for all kinds of reasons, mostly government backed and mostly because this is now a policy-driven strategic industry. Previously, it was a commercial, prosumer, kind of fun-ish type of, nascent growing market. Now it's a strategic imperative. And so our biggest competitor are still foreign, not domestic.
Okay, so it's not a domestic. And I think that's what you started to say there. We did have the audio cut out again. Several folks here asking, missing the first part there. And I think, correct me if I'm wrong here, but I think what you were saying there is that your biggest competitor is not someone that's domestic, rather it's a foreign company. Is that correct? Okay, he said yes, that's correct. Keep going. Sorry.
Yeah, it's the foreign manufacturers that are really the competitors in the space, because if the market manufacturing base was 10 times larger in the US, it still wouldn't meet demand. There's no way we're going to meet demand over the next couple of years as a company. We could scale 5 times what we're planning, we still wouldn't meet demand. But what's important to note is that it's those foreign manufacturers with the low price, government, strategic imperatives to beat America. That's our competitor.
Okay. Really awesome stuff. First of all, I cannot thank you enough for taking time out of your morning, particularly on a Monday, here to talk with us. I hope to have you back. The drone theme is something that a lot of us have actively been investing and trading, and we are certainly watching it. So really, really appreciate it. Folks, Cameron Chell, CEO for Draganfly. That's ticker DPRO on NASDAQ, DPRO. Cameron, thank you so much for your time here today. Look forward to checking back in with you as you continue to advance the business. You're quite welcome. Folks, technical issues, audio issues, that's not going to stop us. We're still going to get everything done here. Cameron did a great job there, and even when we asked him to repeat some of that stuff, he was kind enough to do that. We will continue to bring these CEOs on the program here. You can ask them directly what's on your mind about that. I am super excited for the drones, as y'all know about that. Especially with ONDS. DPRO was not one on my radar, and it is now. So this is definitely something that I'm going to be watching here. Hope that you all enjoyed that. By the way, quick look here. DPRO trading up by about 5%